Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. A lot going on this week. In addition to still kind of money moving around off of the election outcome, we have that huge announcement yesterday from Pfizer about their COVID vaccine, and also still plenty of earnings. And one of the names I had circled on my list coming into the week was Rocket. We traded this quite a bit back in August and September, and then wrote it up. Unfortunately, also wrote it back down. And now with earnings this week, I felt like it was a pretty good setup for potential, turn and burn is what I call it. Is basically like, you know, get get momentum going again, turn back higher, and then really start to take off again. But obviously, the setup, it is, to me, it seems more bullish, but they're still going to really have to deliver, and the stock's going to have to act positive, right? So, there's a lot of moving parts with this. Um, One thing I liked about Rocket, though, in addition to it like being off the high, option pricing seemed decent. So they're pricing about 3.25 for like the short-term options. So those are the weekly ones that expire Friday. And they had a beat and raise quarter in September technically, but the reason why I say technically is because they actually guided preliminary numbers earlier, and that's what really started to move higher. So coming off a real strong quarter, option pricing seemed decent. Stock really hasn't gone anywhere in the last like month and a half or so. But what I thought was interesting was like the longer term options, and that's why I was looking at like March options because I felt like if the quarter's good and starts to build, it could really start to perform well because it's significantly off the high from a month or 2 months ago at this point. So I thought like the long term options were an interesting way to approach it. And what came up during the day today, and what I was talking about on the VTF for a little while, was this idea of like hedging with like real short term, right? So going into earnings, thinking like March options, like a long-term strategy on the bull side. And part of the reason why is I want to be involved, be able to stick with the idea if it works and it continues to work over a long period. But also B, if it doesn't move initially, right, if it just kind of chops around, doesn't have a huge reaction to earnings, then those March options should hold on to premium relatively well, or at least better than the short-term options, right? Because a lot of the March option premium is time value, right? And that's not going to dissipate after like a one-day earnings report. So um, in that case, like what could potentially really disrupt that trade would be a significant move lower immediately, like very near term, right? So if the stock got absolutely crushed on earnings, that's really going to weigh on those long term options, even with all that extra time, because if the stock gets down into like the 17, 16, 15, 14 range, which I know is a huge move, that is going to make those long-term options. I don't want to say, it's not going to make them a zero, but it's really going to hurt them pretty significantly too. So I do like the idea of like a long-term position, but I also think it's smart to maybe hedge with like some really short-term options just in like the event that it does get hit, right? Because there are a lot of weird, strange reactions going on in this quarter. And if I'm able to look at some sort of hedge and not materially alter my risk reward profile, right? So if it doesn't materially alter it, then in some instances I think it makes sense, and like this is one of those instances. All right. So this was something we talked about in the VTF during the day. I wanted to make sure I talked about it and just kind of walk through because it is kind of an important concept when you're playing options around earnings. Is that especially if you're playing longer dated stuff, one of the benefits is the time value, and they won't necessarily react as much to earnings. But at the same time, if you do get a really substantial move against you in stock, that's obviously going to hurt your options as well. So this is how I approach it sometimes: is look at like very short term, lower debit hedges to work against like some of like my longer term option positions. All right. So if you like this video and you're looking for more information on trading options into earnings or hedging with options, please follow up with the link in the description of the video for more information on options and play. I hope you guys have a wonderful night. Stay well, and I will talk to you all tomorrow.